Hi, my name is Ben Ching, and today I will be conducting a financial analysis of General Motor Company, or GM. GM is the largest automaker in the United States and was founded in 1908 by William C. Durant. GM went public in 2010 following the Great Recession of 2008. This move was not only for GM to begin to pay back some of their debt that they had acquired in the downfall, but it also brought them back into a positive light for many Americans. Today, GM has 225,000 employees with an astounding 19,000 dealers in 125 countries. The competitor that I have chosen today to compare to GM is Ford Motor Company, another leader in the automotive industry. The profitability analysis shows GM's return on assets, which shows the percentage of profit a company earns in relation to its overall resources, are significantly larger than that of Ford Motor Company's in the past 2 years. In addition, GM's profit margins were also larger than Ford's last year and were more than competitive in the years before that. Asset utilization ratios help analyze and identify whether a company is wasting its assets or putting them to good use. Some asset utilization ratios include total asset turnover ratios and fixed asset turnover ratios. Not only is GM's asset turnover consistently above that of Ford's, as you can see on the tables below, they have been among the leaders across the board in the industry. By consistently utilizing their assets, GM has set themselves up to sustainably continue to perform. The next ratios we are going to look at are GM's current as well as quick ratio. These give a picture of a firm's liquidity, or their degree of ease in which assets can be converted into cash and put into the market without losing their value. Current ratios measure a company's ability to pay back their short-term obligations. Outside of 2016, GM has consistently shown good financial health here as well as numbers well above Ford's ratio. This helps investors remain optimistic for the future. Again, outside of this past fiscal year, GM has had a better quick ratio than Ford. However, seeing that number rise closer to 1 would be preferable. The financial ratio analysis looks at debt utilization and how well GM and Ford manage their debt. By looking at the two tables, and specifically the company's total debt to equity ratio, we can see that GM has slightly increased their debt in recent years, while Ford in fact has been reducing their debt. That being said, GM still has a smaller ratio and has for years. When looking at GM and how they currently are managing their finances as well as what they are doing to set themselves up for the future, it is encouraging to see the steps being made in the right direction. It all starts with Mary Barra, GM's CEO, and her strong leadership. From scaling back abroad and focusing time and resources back home to striving to become a new leader in ways to fuel and run our cars that are more economically friendly and environmentally friendly, Barra has brought a new lifeblood to the company and the industry. General Motors stock has remained fairly constant as seen on the graph here, with their peak price coming in December of 2013 at $40.87 and their current selling price not being too far off from that at $34.93, investors can sleep easy at night knowing that their investments are safe. Though safe is good and comfortable, senior leadership at GM is of the mindset that they should be a dominant force in the industry. By selling Opel in Europe, in many ways freed up much of their time and resources to focus on North America and China. GM has made it clear that they are not going to keep anything on life support while they could be thriving elsewhere. By becoming competitive in all vehicles and not just trucks and SUVs, GM's plan to create a more sustainable and healthy environment for success going forward looks positive. GM currently trades stocks on the New York Stock Exchange as well as the Toronto Stock Exchange. Again, by focusing on North America and China as the two main sources for new growth, GM expects to see the fruits of their labor come quite soon. Since 2012, GM has seen their rise in their net income, total assets, and total equity, all which are fairly good signs that though there may be tough times, the future looks bright. GM, just like any company that is hoping to grow or expand their reach, must gather funds in order to do so. Therefore, they have accumulated $9 billion in bonds outstanding. This in many ways plays to the old adage, you have to spend money to make money. In order to get where GM wants to be, they must be prepared to spend the cash. GM's long-term debt has slightly gone up in the past year, but has raised little concern when it comes to forecasting their future overall. This quick SWOT analysis shows GM in a different light outside the numbers. Their biggest strength, again, is their North American and Chinese presence, while their biggest fault may be their image in the public eye. A great opportunity that GM has already been warming up towards for years has been their hybrid and electric cars. That being said, with the recent and powerful surge of Tesla, the market has suddenly become smaller. Looking at GM, there are many things that they are doing right in order to remain a top player in the automotive game. By continuing to focus on China and electric cars, they may in fact be able to make an incredible first impression on millions of new customers. However, with Tesla making similar moves to grab their stake in the market, research and development for new products has become even more crucial. Lastly, the autonomous self-driving car is less than 2 decades away. Being the first to market may pay large dividends long-term for General Motors. In conclusion, I think that General Motors' finances are in a pretty good spot. They have set themselves up nicely for a future and are spending money in the right places in order to assure that. However, competition abroad and at home is not getting any easier, and if GM hopes to be atop the automotive world once again, they need to continue to innovate and create the next generation of transportation. Thanks, and I hope you've enjoyed this presentation.